Hi guys. Okay, now here we go again with another backtest video. I'm trying to make these videos as short as possible so I don't get to waste time and bore you guys with a lot of time consumption without no information. All right, so let's get into it. Now we have this pair VIX VIX 10 1S. Yep, shit. Yeah, we have this VIX 10 1S. So this was what happened last week. We're trying to find out if we were supposed to take this trade, what would be our site? What would we be looking out for to take this to having to join, or rather having to join this trade as a buy at this point, right? What is that thing we should have been looking out for? All right. So let's go. So on the daily time frame, we see the market has been bullish all the way from here. It has been doing a series of higher highs and higher lows, right? Now, a market last high that market broke was here. That's just before, that's just before the, the week, before just this week. So this was the last high it broke off from. This was the last high. So this is like a break of structure. So our range would be between here and here. So we're trying to look out if market would ever come back. What would have made market come back to this point too? So on a daily, to take a buy. So on a daily, we had our order block here, which is this red candle. And again, we had a what do you call it? A fair value gap area here, right? We had a fair value gap area at this point. At that point of the fair value gap, oh, excuse me. I'm yawning a lot. I'm just tired. At that point of the fair value gap, we have a zone. So there was a zone here. Market respected this place initially. I think if I push it backward, it would mean something. Yeah, I guess so. So market respected this place before as a support, broke it down, took it as a resistance, came back here as a resistance, broke it up, and we would have been expecting market to come in and tap into the zone, either on the other block or on the zone, right? So let's go down to 4 hours. So on the 4 hours, this was our range high, range low, and daily fair value gap, right? So on the 4 hours, we have series of fair value gaps here, just below the zone, but market didn't get actually to that point. But market tapped in. You can see the tap. It was a little bit of tap. This is where pending orders, traders would have put their buy limit here to take profit above. But well, I don't trade pending order. I'd like for confirmation. So market all the way from this point trended to that point after breaking this low. It broke this one. It broke this low. So it was like a downtrend. So the only two things that would have made us buy this market, or rather sell this market, or rather buy this market rather. So the only two things that would have made us buy this market is if we see a confirmed break of structure and retest and we buy. Like something like this. Something like after I broke this place, this was a break. This was a break. Let me put it clear so you guys see what I'm talking about. Yeah, so this was a break. Yep. And it was somewhere from here. Yeah. So somewhere from here. So it broke this point. Still came, broke this one and broke this point as well. So at this point now, it's either we see something like this, breaking these highs, all these highs here, and retesting, then we'll take the retest maybe in another block area or fair value gap area and buy to the high, to this high here, to the swing high, okay, or to our range high, trading range high. So either we'd see that or we'll see the other one. So either ways, we're supposed to That's if we don't see at this point, the first criteria is to see like a break of structure and buy and retest and buy, or a full candlestick formation off after tapping on the zone, after entering the zone, coming out and closing above the zone. So it has to be a full candlestick formation, which that is the case here. We see this fully formed star, morning star here. So my entry would have been from here to this point. Yeah. So if we're taking 1:3, so I'm trying to, yeah, this is like a 1:3 already. Yep. So this would have been my entry here because I see this fully formed and it tapped in on this place. Yeah, I know some traders like the sniper entry traders would have actually bought the market or put a pending order here and all of that. But if you put the pending order here, definitely your stop will be here or maybe here. You get so it would approximately almost be the same thing. So, but then this was where I took it. Let's see. Let me put the pending order there and let's see. So if you put the pending order, this is where I took my profit from. Yeah. So if you put the pending order and your stop is somewhere here, it's like a 3.9, let's say 4. Yeah. A 4. So there's no much different. I'm making 3.3. 1:3, you're making 1:3.9. So it's good. It's still good. All right. So sorry, I have a message. Okay. Okay, it's not for me. All right, so that's the case on this one. If you even break it down to 1 hour, let's see what we have on 1 hour. On this point, was there anything here to indicate market tapping on this zone? I can't see anything here. The only closest, this was where it broke out from. So it would have been like this fair value gap here. Market would have respected the fair value gap here, but market didn't go as far as that. So 4 hours would have been the best point to enter the trade from. It would have been the best point to enter the trade from. On a 1 hour, it also did the same, like trending down from here all the way to that place. But then on a 1 hour, the break happened here. So if you were entering here, nah, it was a bad entry. If we had, remember there was a trade, there was a back test we did some couple of videos ago. If we had something like this, like at the half point before the break, we had something like a candlestick pattern that now engineered the break of that high or of the low, then it's safer to enter. But this candlestick pattern engulfing closed here. It didn't actually close up at this point. So at this point when it closed, it was just a full candle. There's every possibility that market might not keep going up, might just come down. So I like to stay safe. I always like to stay on the safe side. I don't like to over leverage or over trade my account. So 1 hour time frame would have been a bad idea to take this trade. Would have been a serious bad idea. It was really a sniper entry. Just look at how that thing tapped in on that point and just left. It was really a sniper entry. Well, so that's just it for this one. If you see something like this happen during the week, while you're doing your back tests, while you're doing your analysis for the week, either in Forex or synthetics, just keep an eye out for these things because the difference is just the difference between Forex and synthetic is just that one is more engineered or controlled by news and the other one is not. All right. So it's a good thing. The strategy can work everywhere. So I'm not just a market specialist, I'm a trade specialist. You get so all right, let's do this. I think we're done with this one. I'll see you guys on the next video. By the way, if you're not subscribed yet, please do well to click the subscribe button and also follow me on my socials, Instagram, TikTok, and like this video, drop a comment and share the video, right? See you guys on the next video.